Hello and welcome to another update video about gold. Yeah, on the gold chart, I'm still watching for lower short term, but tracking an overall bullish scenario. You know, on the gold charts or generally the metals, it's sort of similar to cryptocurrencies, which we're obviously analyzing a lot on our main channel. The corrections just take forever. They take forever. I mean, this wave 2 correction here, yeah, it's been taking now since May. Yeah, so we talk about June, July, August, September. Okay, yeah, maybe all of September. I don't know. Maybe October as well. Could be a year-end rally as this looks like, potentially, yeah. So I'm still watching for a still unfolding correction. What we tracked before as a 1-2-1-2 setup seems to become a larger 1-2 setup. The previous scenario hasn't been invalidated, but I want to keep it simple on the chart. I want to give it more space if it needs it. In an extreme case, it could come down to 1720, and I would probably still focus on a potentially still to come third wave rally, okay? But at the moment, what I can confirm to you is that I don't see a low in place yet. It could be, but it is, in my opinion, less likely. The reason is that this here doesn't seem in any way directly bullish. It seems to be something like a still unfolding B wave or something. So we're going to zoom in a minute. Basically, it's all still very much in line with previous videos and analysis. But what you need to understand is, in doubt, I usually focus on upside when we talk about the metals. I rather track a bullish scenario and risk being wrong than tracking a bearish scenario, because I know with the metals, when they go, they go. It is similar to crypto. Okay, not necessarily altcoins, but if we talk about Bitcoin, Ethereum, when they go, they go. And the corrections are super draining. They are super boring, and everybody gets bored and people switch off. And when everybody switched off, they suddenly go, and they can go very, very quickly. I mean, look at what happened here in November, right? Also here we had an amazing trend reversal support area, which worked out so nicely and price rallied in a larger impulse. So I have an A wave to the downside of a larger wave 2. This here is a move up that rallied into resistance. I wouldn't rule out to go deeper into resistance. So this could be an A wave, this could be a B wave, and this could be an unfolding C wave in wave B. So let me put the micro structure on the chart. That is likely going to morph. So A wave, B wave, and a C wave. This is likely going to change. I'm not so convinced about this here to be, a C wave to the upside. It doesn't really have that momentum. But what I'm tracking is a potential triangle. B waves can, for example, unfold as a triangle. And I'd like it to be a triangle, because then I can be more sure that it is indeed an ABC structure. A wave down, B wave up, maybe as a triangle or sideways, yeah, and then a C wave down. But what about a bearish scenario? I mean, with a bearish scenario, if we say, okay, we are starting an impulse to the downside, and it would be like here, a wave 1 down, yeah, a wave 2. Okay, a wave 2 cannot be a triangle. So that's what I mean. I'd be happy if this was a triangle, because wave 2s can't be a triangle. So if this is, okay, an ABC, that's fine. It could still be a wave 2, and then third wave down, fourth wave, fifth wave. So that could be quite bearish. But if it's a triangle, it cannot be a wave 2. So a wave 2 cannot be a triangle. So if it's a triangle, it's probably a B wave, and would then unfold as follows. But again, it's too early for a triangle to confirm a triangle. We need 3 waves in place to confirm a triangle, or at least have a good indication. A wave, B wave, C wave. Okay, if it forms a lower high, it could be a C wave. A higher low could be a D wave, and then this. Then we have an Elliott wave triangle, and then one more low in a C wave. I'm going to leave that on the chart as it is, as a triangle, because I think it could develop a triangle formation. But again, it's just a bit too early to confirm that. The key is to keep it very simple. As long as price stays below 2047, which is the 78.6 retracement of the A wave to the downside, I focus on lower because this is resistance. So if we get a break above it, it is unlikely still a B wave. It would then most likely already be a more direct breakout, okay? But for now, I don't see that at this stage. So resistance did hold already here on the, what was it? 31st of July. And yeah, against that resistance level, the focus is on lower. Bigger picture, against this support area, we focus on higher. But yeah, it's a huge area, that's correct. So they are levels to watch, okay? We need to wait for a clear impulse to form of these lows to confirm that a low is in place. But this is generally the area where the price should turn around and react to the relevant FIB levels, starting at 1908. Okay, the C wave should ideally go lower, so at least 1853. But we can also calculate a target by taking the length of the A wave. Now here's where the problem starts, because I don't have an end of the B wave, so I can't really calculate a target for the C wave. Let's just assume, let's just take that high here at around about 2011, yeah? Because then we can at least get some numbers, but be aware they are moving targets. So the 1-to-1 ratio, an absolute key level to watch, will be at 1823, just for info. So I leave the C wave there for now, but that is likely going to morph depending on where the B wave really ends. Okay, that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.